Iran just shut down one of the most important shipping lanes on the planet. Again. Over the weekend, the Strait of Hormuz became a battleground for the third time this week, and it's about to reshape your ASX morning. Here's what happened, and here's what it means for your money. Let's start with where Wall Street actually finished on Friday, because that number is about to look a little outdated. The S&P 500 closed up 0.42% at 7,575. The Nasdaq Composite added 0.29%, closing just above 26,280. The Dow Jones Industrial Average rose 0.29% too, settling at 52,637, still short of the record it set earlier in the week. The Russell 2000 was the outlier, slipping about 0.5%, a sign the rally wasn't as broad as the headline numbers suggested. The VIX, Wall Street's fear gauge, dropped more than 5% to just above 15, about as calm as markets have been in weeks. The 10-year Treasury yield eased for a second straight session, down to around 4.56%. Gold slipped 0.65%. Crude oil eased too, and Bitcoin held roughly steady through the weekend, hovering around $64,000. Here's the thing. All of that calm happened before the weekend. And the weekend changed everything. So what actually happened between Friday's close and this morning? On Saturday, Iran's Revolutionary Guard Corps attacked a container ship transiting the Strait of Hormuz, setting it on fire. 23 crew members were left stranded, and one is still missing. Iran then declared the entire strait closed to shipping. That's not a small threat. Around 1/5 of the world's oil and gas trade moves through that waterway every single day. The United States responded fast. Overnight into Sunday, American forces carried out a third round of strikes this week, hitting roughly 140 Iranian military targets. Iran hit back, launching missiles and drones at American allies across the Gulf. Bahrain, Kuwait, Qatar, Jordan, and the United Arab Emirates all reported intercepting incoming fire on Sunday. And here's the part that should worry investors most. As of Sunday, the United States and Iran can't even agree on basic facts. American Central Command says the strait is open and traffic is flowing. Iran's own maritime authority says passage isn't possible. When two sides can't agree on whether a critical trade route is open or closed, markets have to price in the worst-case scenario until proven otherwise. Now, before this blew up, Friday's session actually had two genuinely good stories running. South Korean chipmaker SK Hynix made its debut on the Nasdaq, and it was massive. $26.5 billion raised, the largest ever US listing by a foreign company. Shares popped nearly 13% above the offering price on debut day. And Meta had its best week since early 2024, jumping about 6% on Friday alone after a research note suggested the company is getting smarter about its AI computing costs. That capped a nearly 15% gain for the week. Those two stories were the headline on Friday afternoon. This morning, they're a footnote. The Strait of Hormuz is the story. Let's talk sectors, because Friday's rotation tells its own story. Financials and industrials found support as yields fell. JP Morgan, Bank of America, and MasterCard all posted gains, and Caterpillar and Applied Materials move higher too. Big tech was mixed but mostly positive, led by Meta and Nvidia. On the losing side, healthcare dragged. IBM fell more than 2.5%, United Health dropped over 1.5%, and Merck slid more than 1%. The signal from Friday was classic risk-on positioning. Money moving into rate-sensitive names and AI infrastructure winners, out of defensive healthcare. But that was a signal for a market that didn't yet know what was coming over the weekend. Expect energy and gold to dominate sector conversation this morning instead, as traders reprice for a live, unresolved conflict over the world's most important oil choke point. Now let's get to what actually matters this morning. What does all of this mean for the ASX? First, open direction. Don't expect the gentle green open that Friday's numbers alone would suggest. This is more likely a mixed, choppy start. Falling US yields and a calm VIX are constructive, but weekend headline risk out of the Middle East usually shows up first in energy and gold, before it settles into the broader index. Watch the first 30 minutes closely. Second, the sector to watch above everything else is energy. Woodside, Santos, Beach Energy, and Karoon Energy are all directly exposed to Hormuz disruption, because renewed conflict around that choke point puts a risk premium back into oil prices, and that premium tends to show up in producer share prices before it shows up at the bowser. This is the cleanest, most direct trade coming out of this weekend's news. Third, gold. Newmont, Evolution Mining, Northern Star, and Regis Resources sold off slightly on Friday as risk appetite improved heading into the weekend. That story is now stale. When investors wake up to an unresolved military escalation, gold typically catches a safe haven bid, so don't be surprised if miners open firmer than Friday's number implied. Fourth, the Australian dollar. It closed Friday just under 70 US cents, up slightly on the session. But weekend risk-off flows tend to push money into the US dollar as a safe haven, which usually means AUD softness at the open. If you're an exporter, particularly in mining or agriculture, a weaker Aussie dollar remains a tailwind on repatriated earnings. If you're an importer, or you're running a retail business with US dollar costs, this is a headwind worth watching closely today. And fifth, iron ore. There's no direct link between the Strait of Hormuz and Australia's iron ore trade, so BHP, Rio Tinto, and Fortescue are more likely to simply track the broader market mood today rather than move on a commodity-specific catalyst. If you only watch one stock this morning, make it Woodside Energy. It's the most direct read-through from this weekend's escalation, Australia's largest LNG producer, sitting right in the path of a renewed threat to global energy supply. If oil catches a bid tonight in the US session, Woodside is usually first in line on the ASX. So here's what to actually watch during today's session. Number 1. Oil prices. If Brent and WTI crude open higher when US trade resumes tonight, that's confirmation the market is pricing in real Hormuz disruption, not just headline noise. A move back above $75 a barrel would be the number to watch. Number 2. The Australian dollar against the US dollar. A slide back toward recent lows would tell you risk-off sentiment is deepening. A bounce would suggest markets think this escalation gets contained quickly, the way previous flare-ups have. Number 3. Whether energy actually leads the ASX today. If Woodside and Santos open strong and hold those gains through the session, that's the market telling you this is a genuine repricing event, not a one-morning headline reaction. Those three signals together will tell you whether this is a one-day story or the start of something bigger. If this saved you time this morning, hit subscribe and turn on the notification bell, because tomorrow morning we'll know a lot more about whether this Hormuz situation is easing or escalating. Drop a comment and let me know. Are you buying energy on this dip or staying cautious? I read every one. See you before the bell.